Hey, Mike, welcome back. How are you today?
I'm great today. Thanks for having me back. This is the coffee with clients, right?
Yep. Coffee with clients. This is our first time in our Harrisburg area. So it'd be great if we could take a couple minutes, let you introduce yourself, and kind of give us a 30,000 foot view of Gradient Investments.
Yeah, it'd be a pleasure, Chris. Thank you. My name is Mike Binger. I am the president of Gradient Investments. And Gradient Investments and WealthKare, we're strategic partners. What Gradient Investments does is we manage roughly $6.5 billion for about 400 advisors around the country. But our investment team, we create and actively manage, which means really we're selecting the securities inside of about 30 different investment portfolios slash strategies. And these investment portfolios slash strategies are really what firms like yours, Chris, use for their clients to invest in. So we have a great investment management team. We have six CFAs, which is really the gold standard designation in portfolio management. Gradient Investments is about 50 people all told. Myself, I've been in the industry now in the investment management industry for 34 years, so I'm aging myself a little bit here, but yeah, it's been we've worked with WealthCare for a long time. We think they're wonderful strategic partners. One thing I'd like to point out to your clients, Chris, is that as an independent RIA firm, you can choose to work with whoever or whatever money manager you would like. We're very grateful and thank you that you have chosen Gradient Investments to work with and maybe a couple other firms. But because you are an independent RA firm, you're a fiduciary, which means you have to keep your clients' best interests at heart at all time. And we greatly appreciate and hope we're bringing value to what you're doing for your clients.
And we've had a wonderful time with you as a strategic partner as well. Just last week we got to spend some time out there in Minnesota, Bruce the Fourth and myself, at your Elite Advisor Forum. While we were there, we saw from a lot of industry experts from, J.P. Morgan and Goldman Sachs and other leaders in the investment industry. So let's get your take on some of the top key topics we discussed last week and how you feel they could have the greatest impact on our clients.
Yeah. So our Elite Advisor Forum, it's really an investment conference that we invite our top RIA firms that we partner with to this event. It's a full day and a half, all day Thursday, half a day Friday of presenters. And it's not really like a Gradient Investments training. It's really an investment industry forum. So we have three areas where we bring in, I mean, and these are top-notch presenters. I mean, you've seen these folks on CNBC and Bloomberg. They are truly nationwide subject matter experts. And then we really want to cover three areas. We want to cover their thoughts on the investment markets, what's happening today, where they see things going. Then we have a second area where we call practice management experts, and that's for firms like yourself to really learn what are some of the best practices around the industry right now, and maybe there's some new things that can learn. And then finally, we bring in one or two, I'm going to say motivational speakers. This year we had a Navy SEAL, and he's talking about how to make yourself a better person, adversity, things like that. I think what can help your clients the most is, I mean, I don't know about you, but after I leave the conference and hear from these fellows, I mean, I feel I have a better pulse on the investment markets, and I love hearing their forecasts. And that helps us in security selection and portfolio allocation, keeping us, really up to snuff on the investment markets. And I think that's going to help, Chris and Chris, you and Bruce the Fourth, and you can bring back to your office all the recent market forecasts and subjects you heard there. So I think it makes us better investment market savvy. Secondly, hopefully you got some tidbits from the practice management firms that you can bring back and make your firm more efficient and better able to serve clients even more so than you are, and things like that.
Yeah, and I mean that's one of the nice part with the way that our timing worked out for these events is we got to hear all that, and then a week and later we get to see our Harrisburg clients, and then in 2 weeks we'll be up at the State College so they can hear some of this
Great.
information. So I mean, first, one of the things they talked about when it's looking at the markets is the Fed cut rates last month, and it's looking like from a lot of those experts they're expecting the Fed to continue to do so. So what's your take and Grady Investments view on that action, and how do you think it's going to affect the markets going forward?
Yeah, that's a really good question. So last week or 2 weeks ago, the Federal Reserve Bank cut interest rates for the first time since 2020, back in the COVID days. What surprised a lot of folks is that a lot of folks thought it was really a foregone conclusion that they were going to start to cut interest rates. And most folks thought it would be 1/4 of 1%. But instead, they did it 0.5%. So twice what people thought. So they brought, the Federal Reserve interest rate down from about 5.25 to 4.75, 4.75%. And then you could take that a couple of ways. You could say, "Oh my goodness, what does the Fed see that they feel they need to lower interest rates?" Or and then generally they do that to stimulate the economy. What are they seeing that we don't? Is there something sinister going out in the economy? And the Fed was very vocal that no, that's not the case. We're really doing catch up because we probably should have started cutting back in July or something. So it just said, "Look, our first time we're going to do it 50 basis points." I feel like they can do that mostly because they feel that inflation is firmly under control and the unemployment rate is still right around 4% and very stable. So with that, I think the Fed felt that they could cut it. And stock markets love it, when the Fed can actually cut interest rates into economic strength versus weakness.
Mhm.
And so I think the stock market is taking it as like this 50 basis point rate cut. That's a good thing for stocks. So that's our take on it.
Okay. And what about the fixed income investments?
Well, fixed income and interest rates have an inverse relationship, right? So when interest rates go up, bond prices fall, which is bad. But now interest rates are falling and they're expected to fall, like you said, twice more this year and probably 3 to 4 more times next year. So now interest rates are falling and bond prices are rising. So when interest rates are falling, that's a fairly good time to be in the fixed income or bond market, like you said. So we're positive on fixed income investments right now.
All right, wonderful, good. While we were out there, we get questions all the time for our clients. What about this cryptocurrency? Is that something we should be putting money into? And while we were there, Anthony Scaramucci, was on stage, and he's kind of, the Bitcoin king in a lot of circles. So, where does Gradient stand on crypto? And if our clients wanted to get involved in that, how can they through Gradient Investments?
Yeah, boy, that's a lot of questions there, right? So cryptocurrency and the biggest cryptocurrency is Bitcoin. There's another bigger one called Ethereum too. Those are the two that are bandied around mostly. But what cryptocurrency really is, it's an kind of a global alternative form of payments and transactions between two parties or three parties or whatever it may be. There's a lot of debate. Is crypto a scam? Is it real? Is it the next wave of technology? I'm a little bit older and I've been in this industry for a while. I tend to be a little more skeptical of things, but it appears that the crypto industry continues to grow. It continues to be used more and more. I mean, it's a very small part of our transaction economy right now, but it appears to be growing. So I do believe that crypto is real. How I mean, I think big time adoption of it could take not years but decades. But it seems to be moving forward, and it's a real asset class. The SEC, which is the governing body of stock markets, has approved cryptocurrency for ETFs that are traded on exchanges now, which is a big step forward for crypto. So, all in all, I believe it's going to be a real asset class moving forward. Anthony Scaramucci, who is really an expert in this field and one of the founders and investors, bigger investors in the area, He's a strong believer on cryptocurrency. Um, so I think it's real. Your clients, if they're interested in it, they can get exposure to it in our digital discovery portfolio. Um, and our digital discovery portfolio is really kind of a newer technology, cutting edge type of movements in the tech area. Um, it has cryptocurrency exposure, it has NFT exposure, it has artificial intelligence exposure. So it's really on the cutting edge. Tends to be a more volatile portfolio, so we wouldn't recommend putting more than 10 or 15% of a client's assets in this portfolio, but it's a great way to get exposure to those cutting edge technologies.
Great. And I mean, we feel the same way, and I know our clients are too. It's we're a little old school and don't understand it, so it's a little
Yeah.
scary. But I definitely agree. It seems like it's going to be sticking around. So,
Yeah.
um, going on to we're about 4 weeks away from some big event here in November, and I think a lot of our clients are concerned about what does that mean for their portfolios. We're talking today a lot about retirement taxes, and one of the events that happened because of could change because of the elections, the expiration of the Tax Cut and Jobs Act, or the Trump Tax Act. Do you have any feeling that will affect the markets in any certain way?
Well, let's go back to the beginning of that question first. We
Sure.
do have a presidential election coming up. We have one every 4 years. The rhetoric always ramps up beforehand, and and then after the election, it quiets down, and it's business as usual in our country, right? One of the things that we always preach out of Gradient Investments is that politics are one thing, and your financial plan and portfolios are another thing. And when you start to make portfolio and financial plan decisions based off your political feelings, that's when you tend to make emotional knee jerk decisions, and you tend to detract from value of what is a good, solid, long term financial plan. When you think about it, Chris, when your clients come in and see you, I mean, they come in and they develop a financial plan not for 2 years or 4 years or the next presidential election. They want a sound financial plan that works for them for the next 10, 20, 30 years. So we really encourage you. Look, um, politics can invoke a lot of emotions, but they really have very little effect on the investment markets over time. Now let's switch over to your tax question. So what a lot of folks are talking about is, you're right, the Tax Cut and Jobs Act does expire in I think it's at the end of 2025. So I would expect no matter who gets into office that they'll let that expire, and in those higher income, and we're talking about people earning more than $400,000 a year, will go up again, and corporate tax rates will go up. And I say that not based on politics, but basically saying we have a deficit spending problem in this country by the government. It hasn't gotten any better, regardless if a Democrat or Republican is in office. It appears both parties are willing to spend above what the government takes in. And that's why we get these big deficits. I mean, we've all seen it, the debt clocks, the $35 trillion, those kind of things. So I think, taxes are what brings in revenue to the government, and they're going to need that. So I think it'll expire regardless of who's in office. We'll see. I mean, it's a tight race right now, Chris. I mean, the polls, one week they're saying this person's ahead, and the next week they're saying this person's ahead, and they're switching states and all these kind of things. We'll see. At the end of the day, it's a tight race, but just keep in mind, one thing: politics and portfolios don't mix.
Great. And Mike, we're not going to put you on the spot like you guys did for all your wonderful speakers out there. We won't ask you your feelings on that,
Yeah.
so we'll let that
Maybe
go.
we should just mention that, Chris. We did put our speakers last week on the spot, and we put three of them on the spot. And we said, who do you think is actually going to win the presidential election? And it kind of surprised me. Two of them thought Kamala Harris would win, and one of them predicted Trump would win. So I think that just kind of shows you how tight this race is, and how it's ebbing back and forth depending on debates or news flow or whatever it may be.
Yeah, yeah, great. And then, Mike, let's just kind of wrap up with the markets are at all time highs. We have the uncertainty in the Middle East, the election, everything kind of going on here. So for the next, say, 12 months or so, where do you guys see the market going, and can you give us a little insight as to why?
Yeah, I mean, Chris, we're pretty constructive still on the market. We realize that it's been a good 18 months in the market and things are pretty high. But when we look at the fundamentals of the market, the things that really over time drive stock prices, it's not really headlines. It's three things. It's how's the economy doing? How's corporate America? How are the profits of corporate America going up or down? And valuation. And when I look at it right now, our economy is good. I mean, it's growing at about 3%, and we measure that by a broad measure of GDP. So it looks like our economy is expanding, which is great. And corporate America, profit growth of corporate America is really forecasted to do quite well. I mean, in 2024, on a year-over-year basis, corporate profits of the S&P 500 are expected to grow 10%. And in 2025, they're expected to grow 15%. Now, those are two growth rates that are well above long-term averages of 6 or 7%. So that's a positive. The only thing that might give us a little bit of a pause is valuations are towards their upper end. But I'll tell you something. Valuation generally does not drive stock prices. Valuation is really a result of how good the economy and how good corporate profits are. And as long as we think they're doing good, stock prices will tend to follow those fundamentals. So we're constructive. We have some strategies that WealthCare uses. For a lot of folks, it makes sense. It's our buffered index and structured note strategies where clients can participate on the upside of the markets up to a cap. And the trade off for being capped is that there's downside protection. So, I mean, when you think about it, a lot of our clients, right? I mean, they're not in the home run hitting stage anymore.
Right.
I mean, if they can get annualized returns of, 11, 12, 13%, that's great. And if they can sleep better at night, knowing that they have downside protection of around 15% of the markets, that's even better. So I like kind of, and we call that kind of a hedged strategy, but I
Mhm.
think it's a good one for this stage of the market cycles. And, I know you guys are using it and it's a big successful product and it really resonates, kind of really around the country with our investors.
Yeah, I think our clients that have gotten exposure to them, enjoy them, and I've seen
Hmm.
good results over the last couple of years too, and the ones that have matured. So
Yeah,
they do real well for our clients. So I,
good.
I think that's about all the time we got for this time, Mike. So I appreciate
Terrific.
your time as always, and we look forward
It's
to.
always a pleasure to appear on Coffee and Clients with WealthCare. Appreciate it, Chris.
Thank you. We'll talk to you later.
All right.